Okay, today we're going to talk about global consolidations with multi-currency and intercompany. Basically, to start this off, to kind of give you an overview, really the intent of this application is when you have customers, not only in a multinational environment where they do business in different different companies throughout the world and need to do restatement of currencies. This could also be relevant if it's just really in the domestic US. And really the key two applications, the two main pieces of functionality here is the restatement of the currencies as well as the automated eliminations. So this application could be used if you're just really focusing on the US with a consolidation process where you need to eliminate intercompany revenue, intercompany expenses. As an example, say a company would charge an administrative fee to another company, as an example, you would then be able to eliminate those intercompany transactions. Now, to show you here kind of a view here, I'm going to select this, and this would be an example of actually a pretty complicated organizational structure. Most of the companies I've worked with don't really have a structure this complicated. Normally, it's more of a one-level consolidation, but you can see here there's a multi-level consolidation. In fact, a variety of different consolidations. You'll notice here, ultimately, the goal here is to consolidate the whole organization into one big global unit. But you'll see down here that there's organizations in Canada, Europe, Britain, US, etc. And you'll notice here that you can come in and set up a variety of sets of books, which is what we call that, to create different types of consolidations at the lowest level. So as an example here, in Canada, before you restate Canada, Germany, and so forth into one big organization, you might have multiple companies in Canada. So you'd be able to come in and consolidate those first, and then ultimately, as all the different consolidations occur, roll that up. Now, to show you the process here, we're going to come over here to the menu, and really everything's going to start off with creating sets of books. So when you look at setting sets of books up, the really intent here is to create every possible consolidation that would be required. Now you'll notice up here, this Qubit Global Consolidation, this basically represents everybody, right? But you'll also notice here that you might come over here and look at a UK grouping, as you saw in that previous hierarchy, where you might have different UK organizations that would roll up into the UK. Similarly, you might have a group of US corporations that would then roll up into the US prior to coming in and rolling up globally. So the point here is for every type of level of consolidation you'd have a separate set of books. Now in my demo environment, I'm going to come in here and just show you an example of how you would set up a set of books. So we're going to use this WW financial statement, which is essentially really consolidating everything anyway. But you'll notice here that the first step is defining your sets of books. And as you look here, you'd be able to come in and identify ultimately the types of income and assets that would be reflected when you do the restatement process. Okay. Now this is the big tab over here. This is where you would identify all the different organizations that would be required as part of the consolidation. You'll also notice here that one of the requirements is to set up an elimination entity, ultimately, so all of your organizations can then consolidate. And if there are intercompany transactions, which you'll notice up here, the system would automatically eliminate, which is the big thing, right? And the other key point to keep in mind here is that this consolidation process essentially can be run every single day. Unlike some of our competitors, specifically NetSuite, where they pretty much have said all along that you can only consolidate at the month end is incorrect. I actually came from NetSuite. And really, basically here, you can run this consolidation at any point in time, and the system will take the currencies effective of that current date from Oanda, which is the internet conversion site that Intacct uses in real time to create those rates, to create the average rates as of a particular day. So now you'll notice here that you could also come over here and consolidate the various dimensions. Okay. The next piece here is the elimination account. I'm going to skip these two other guys here. But you'll notice here, this is identifying all the various, in this case, all the balance sheet accounts that would be required to be eliminated. But you'll notice down here, this is the big one in my particular demo example. Notice here that if you wanted to, you could also set up, you know, revenue and expense accounts that you're always going to eliminate. You could assign percentages to them as well. So imagine if you have, you know, multiple companies that would charge a fee. As you can see here, here's a territory fee, or you sell products to different companies and so forth. You know, there will be intercompany transactions from a revenue and expense side, and we would automatically come in and eliminate those transactions on the fly in real time. So to show you what this would look like, let's come over here, and I'm going to come back here to the consolidation process, and let's run the consolidation. Okay. Now, if you notice here, I'm sitting here way back in 2016, but let's focus on, you know, notice here you have the different sets of books, so you can run different consolidations of each one of those books, but let's focus on the one we've been playing with. And let's come over here, since I'm sitting here in the past, let's run a consolidation as of April 2016. Now, the key point to keep in mind here is this is running effectively the last time, you know, the last day that, you know, as far as the official day that you're running this consolidation. Now, since I'm in the past, this would be reflecting April 30th of 2016. But say hypothetically, you know, you had a situation where you want to see a consolidation every day. So say on April 5th, you want to see consolidation, it would take April 5th's, you know, currencies effective from those websites and do that conversion for you. If you want to do then, you know, April 15th, right, the system would then take the currencies as of that day. So you would literally come in here, when you select that, the system would take that official day here. So let's come over here and consolidate. Okay, you'll notice here that we converted everything to US dollars, which is what that book had said. And you'll notice here, here's all those different organizations, right, where the system could then automatically bring over, in this case, the weighted average rate, because you had told the system when it related to P&L items that you wanted to use the weighted average rate, and then you wanted to use the spot rate, which be effective, you know, in this case, April 30th of all the balance sheet accounts. And you see how the system automatically did that. Now, in theory, you could override these, but this is essentially what the, you know, what the process as far as what the integration was. So let's come over there and hit consolidate now. Okay, so at this point, the system created that consolidation, and now you can come in and take a look at some of the reports. So let's drill in here. Okay, and you'll notice here we have a whole bunch of different reports. So let's just focus here on the P&L for that set of books that we just did, mainly because, you know, let's select that. So let's come over here to the HTML version. And you'll notice here it actually brought in that effective date of April 30th. And then in theory, you can select different locations if you wanted to, but we're going to do the whole thing. Okay, so now you'll see here that this is basically all of the different organizations, all of the different companies that were set up. And then if we scroll here to the right, you'll notice, right, that the system booked an elimination transaction. In this case, you see the $8 million. Right? Now, this did it all at the services level. Now, if we were to run the balance sheet, you would see the intercompany being eliminated from the due to, due from perspective. But let's expand services, right? And you should see here in a second that territory fee, right? And you'll notice here there was a territory fee assessed on every one of these companies. And you'll notice here is finally that since we said in that setup of the books that we wanted to eliminate that intercompany rep territory fee, mainly because that was defined as an account where, you know, there was intercompany transactions going on, you'll notice the system automatically eliminated that. So imagine if you had an organization that had tons of eliminations, you can see how efficient this would be. Now, if this module did not, if you did not use this module, then everything you've just seen would be calculated manually. So as far as that elimination company, no eliminations would have been created. So that what you would have had to have done is create literally manual journal entries to that elimination company every time you wanted to consolidate. So it wouldn't be as slick to be able to run it every day, because in theory, if you ran it every day, you would have to manually make those journal entries. So that's the big one. And also, in addition, as you've probably seen, those currency conversion rates happened automatically. So again, if this module was not being used, you would manually have to do that, perhaps take this to Excel and get some of those reports. So hopefully you've seen pretty much the capabilities of this application. Definitely provides lots of efficiencies, and really to summarize, you'll be able to come in and use this application from a currency perspective for the restatement, as well as the automated eliminations.